Good morning, ladies and gentlemen. Hello, everyone, and welcome to this live trading webinar. Today is Wednesday, of course, 23rd of November, and we're going to have, it looks like from the early morning, some interesting activity in the market because of the news events. They are about to come later during the New York session. But regardless that, we're going to go through our market analysis, like what we do on a daily basis. Hello, Darshan, David, Williams, Cherry, everyone, guys. Really welcome to this webinar. So if you haven't engaged yourself yet with the podcast, please make sure you do so. 3 to 5 minutes every Monday. You can listen to the podcast, and during the week, like today, it's going to help you a lot if you get a good understanding of what's going on. I shared the link with you on the chat boxes, so please make sure you go to the website and either you listen it directly from the website or you just download, like most people they usually do. And our disclaimer, of course, this content is for general information only, and it's not intended to provide trading or investing advice or personal recommendations. So let's go to the Premium Analytic portal, and what do we have as headlines? So we have that looming oil supply shock launches debate in OPEC. Western allies aim to agree on Russia oil price cap Wednesday. EU unveils proposal to cap natural gas prices. These are really these are important news, guys, for everyone, not only for us as trader, but in general. These are useful information to know. Rio Tinto plans larger pilot plant for biomass fueled iron making. Ukraine strikes at Sevastopol and pushes to reclaim key Black Sea peninsula. Goldman Sachs to pay $4 million to settle investigation over ESG funds. And the computer maker HP plans layoffs with PC demand slump stretching into next year. And it says that HP said it will slash up to nearly 10% of its workforce, with a sharp slump in demand for personal computers expected to stretch into next years. So currently they have around 61,000 employees, and from 61, about 51 people in a year. Okay, so we will see what's going to happen there. Let's have a look at the calendar, ladies and gentlemen. Hi, Raquel, HB. And the calendar for today says that durable good orders for the month, they expect it to remain the same in the US. New home sales, they expect it to drop down a bit from 60 to 57. But the major news event, it's the FOMC minutes, and that's going to bring a lot of volatility in the market. And as we always say, thanks God, this event is going to happen when most traders in Europe, US, and Australia, in Asia, they are not in front of their computers. So you're not going to have the tendency for an itchy finger. You know what is an itchy finger, right? To necessarily need to press that left click on the mouse. Yeah, like here, to press it and press it. No, we don't need to do that, ladies and gentlemen. So let's go to the charts. Are you currently in any trade? Please let me know. So we start from the dollar index daily chart. We said that we do expect some reaction here at this area of broken support, now recalled to be as resistant. And yesterday, the dollar sold off. Now we do expect to see some more weakness in the dollar, at least for the day. Anyhow, we are in a dollar downtrend, so everything else priced on US dollar or exchanged with the US dollar, we expect them to have bullish implications, at least temporarily. So let's see the 1 hour chart, 15-minute chart. It's just selling off. The only way to start going to the lower time frames on the euro dollar, pound dollar, Aussie dollar, and so on is if we see a higher high on the dollar index on the intraday charts for those who are monitoring the intraday dollar index. All right. For swing traders, we want mainly to sell the dollar, to be honest, because we are in a downtrend. DAX 40, we gradually making higher highs. We want to retest this area here. So any long positions, let's say 5-minute chart. Yesterday, it was this spike only right after we finished the session with this higher high. It was some positions to be initiated. I didn't do anything, to be honest. Later on, I wasn't even monitoring this market. The Asian session shows some ranging trading activity. Now we have this sell-off. So we do expect that this market is going to come to retest this area. So we are still bullish. FTSE, we talked about this ascending triangle pattern, a continuation pattern that with this pin bar here could set off some more strength to the FTSE. And that's what we experience. I used to have this resistance line here, but because we measured this triangle pattern, and by the way, guys, I have a recorded webinar about the trading patterns. Okay, I talk about continuation and reversal patterns. So please make an effort and you go on the YouTube to the spotlight, and you're going to find them. I can share the links later on. So, but for now, we are still bullish. We see the market is making higher high. Yesterday, we had this lot of volume coming in place, so this area here can be used for some additional long positions, or if the price come to retest this area here, we can enter long if the market doesn't retest any of these levels here, right? So for now, if we see some pullback on the 4-hour, mainly 1-hour charts, some maybe 30 minutes or 15 minutes kind of pullback, double bottoms, we can still buying. That's a good one. Keep it in your watch list, please. Dow Jones, explosive to the upside. We said that we are in this uncertainty here because we were trading below the trend line. Now we are, it looks like we create a new high here in the market. So this trend line, it's not valid anymore. We have to look for the next one. This is our area of resistance. We are almost there. Bullish engulfing on the Nasdaq. So if you go to the 4-hour chart, you can see this double bottom formation. For 4-hour chart traders, this double bottom could be signal the beginning of continuation in the uptrend because market failed to make a new low. Buyers, they stepped in. We have this bullish engulfing, both pin bar combination, bullish engulfing, so too much strength. And potentially we can see prices to come and retest this area here. Okay, now weak dollar indicates strength in the Nasdaq most of the times and on the S&P 500. Remember, we said about we were a bit skeptical about to initiate some positions around this this pin bar here because the market just moved sideways and it just rejected the level. Now with a weakness in the dollar, definitely we can see some more strength to the upside, right? So we can start looking for long. We can keep looking for long trades. So good morning, hello guys. So I noticed that today people that they are in the Zoom are more engaged with questions and chat than the people on the YouTube. What's happening, guys? Usually it's the opposite. Too much silence from YouTube guys today. Pound long on. Darshan, are you trading pound to the upside? So in terms of direction, I also okay, cool. In terms of direction, ladies and gentlemen, that looks more promising to the upside. We have all this room until we make some to retest this area of resistance, although we are still around this consolidation. But again, the long-term downtrend has been broken. Now we are expecting to see some more bullishness to the upside. And weak dollar, of course, it's going to translate it as strength to the pound and the rest. We are awake today, William. Yeah. Pound US dollar hitting to 5.11. Let's see. That's not valid anymore. So let's clean a little bit here. That was for yesterday. What I just cleaned here, ladies and gentlemen, that was from yesterday's minor trend lines for resistance and so on. Okay, now today we can see some strength also in the euro. Although we said that we are around this area of resistance, and this area of resistance maybe not hold, but temporarily at least can push for some corrections. Now, what's the deal with the resistance, and why, as traders trading on leverage, it's better to avoid initiating long positions right to break through the resistance? Simply, guys, because we use the leverage, so we need to have most of the times some tight stops in order to be profited and be benefit by the price, by small price movement. Okay, if we are trading on the monthly charts and weekly charts and we hold positions for multiple weeks and months, then we could enter there, entry. Let me clear a little bit. So we could enter, let's say here. We could have our stop there. So what's this distance? It's almost 400 pips. So in order to make 1-to-1, we need the market to travel all the distance up to here. But the markets, they never go on a straight line. It's very rare phenomenon. Market usually goes in a zigzag. So even this one here, it can create this pattern like the complex correction pattern like Elliott wave theory stated, and then it can shoot to the upside. But if we enter here and we have our stop there, we are very exposed to market corrections. That's why most of the times we use fib retracement, let's say, from here, from the, if we want to buy, if I want to buy, I want to see the retracement on the downward side. So to see the retracement in an uptrend, I need to use the fib retracement tool, starting from the low to the high, because we are in an uptrend, and then it will show me where it's the 50% and the 61.8% retracement, and see this one here, the 50% retracement exactly match with the previous swing, the previous resistance in the market. So because the price traveled so far away and it broke with so much volume, this last previous broken resistance, it can definitely act as support on this pullback, if we're going to have this correction, this deep pullback here. But maybe we're not going to have it, right? So we don't know what the market is going to do. That's why we just try to forecast based on high probability setups, like we be patient and we take trades, let's say only around 50% or 61.8%, or to use some candlestick patterns that they show dominance in the market from the one side to the other. Okay, that's what we do. So next one, USD-CHF. If the dollar is going to get weakened, definitely we're going to see the USD-CHF to the downside. Aussie dollar, again, strong US dollar. It's going to, weak US dollar. It's going to give strength to the Aussie. So if we clear this resistance, we can initiate place some trades to the upside. But for intraday traders, I didn't mention it earlier, but definitely you can draw your trend lines here. If you are trading 5 minutes, 15-minute chart, you can draw your FIB from low to high. You see you have a 50% retracement, matches exactly with the last swings in this time frame. So you can have your orders there to get filled, and you can take your profits around the top, or you can just leave it for 2 to 1. Usually I don't get into I rarely get into trades when I don't have the opportunity to make 2 to 1. Okay, so that's how I trade, at least. So how do you trade the inverse head and shoulder? This question comes from Raquel. I thought one form on Kiwi yesterday into last night. Lost 2 entries, but got the last one correct. Was taken out by a large bull candle. It was on the 1-hour chart. Let's have a look at the Kiwi. So inverse head and shoulders on the 1-hour chart. Yes, it can be, because I see this low here. Anyhow, Kiwi, we expect to see strong bullishness in the Kiwi today because of the fundamentals. And you see, guys, this one here, that was the interest rates announcement on the Kiwi yesterday, last night, so, or early this morning. So why we say around these events we better not have intraday positions? Because the volatility is too much and it can spike either direction before it resumes to take this optimal direction. So for most of the traders, they had the stop here, the stop there, so they got flushed out by this one. And Raquel, I think it applies to you as well. I don't like when people that I do the analysis for, like I do the analysis for you, you get caught on this volatile environment, but it is what it is. This is trading. So well done for your decisions to trade it. You choose the direction right. I assume you did a buy direction, yeah, because you mentioned inverse head and shoulder and the market is pushing upward. So that should be a buy. And yep, perfect. So Raquel, I hope you understand where the problem was. It wasn't something wrong with your trading. It was that we have to take in consideration the part of news events when we are trading on the 1 hour, 15-minute, 5-minute charts around the news events. Most of the times the market, it just spikes either way. So it takes the stop orders from the people who are long, and it takes the stop orders from the people who are short, and then it just continues predominant direction. All right, so I hope this makes sense. So still bullish on the Kiwi for today. For breakout traders, this is a great opportunity here because we have that impulse move to the upside, consolidation around resistance. It looks like it's not gonna hold this resistance. because if sellers were aggressive, they will just push the price to the downside, but they are not. So most likely we're going to see continuation, and my next level it's this one here, because that's where the market came and then create this downtrend. Is it clear to everyone? So that's a good to keep an eye on today and for the next days, definitely. The good thing is that with the weakness on the dollar, we're going to have some good opportunities, in my opinion, to trade this week and the next week. USDJPY, the weakness, we did expect the market to come here, but maybe it will never come there. That's fine. Aussie, Euro, nothing to do with these guys here. Aussie CAD, we do expect to initiate some longs around this area. We see what's going to happen. Euro pound just messed up, guys. The same. Gold, it put this inside candle at this area. So what can we do? We do expect some bullishness in the gold. Of course, the dollar index is down, so gold can be pushed to the upside. Let's draw the FIB tool and see where are we. If we put the 38.8 levels, do I have it here? No, we can just add it. 38.2 and it's 38.2. We are not even on the 38.2% retracement, so we do expect that we're going to see some more weakness because there is a lot of buying interest. It's going to come around this area of support. Guys, does everyone knows why the broken resistance will act as support under some criteria? Do you know why? Well, I think I mentioned it quite a few times, but maybe for people who are new here, you don't know, so let me know and I will explain that again. Crude oil, we had this pin bar 2 days ago on the daily and on the 4-hour chart. So we expected to see some push to the upside, definitely, but we see what's going to happen. Bitcoin and the rest from this support yesterday, they just reacted to the upside. And as we said, weak US dollar, it's going to help everything else related or price the US dollar to push to the upside. The Euro CAD, I have my areas marked here that I have interest to participate long, but not here. I'm not taking this trade. For some people, this inside double bottom on the 4-hour chart, this one here, this one, sorry, and this one, this double bottom can be a new support to initiate some longs. If you do so, please make sure that you have, you do have, there is a good, that's 40 pip until this one here, it's 90 pip. So we are in 2-to-1. I didn't take this trade, to be honest, because it doesn't apply to my criteria, but doesn't mean it's not a good trade. Okay, for other people, it's a great trade. What's next? Euro against the Kiwi. It's a short time implication. So we do have this downtrend now. We draw this channel line. It was 4 days ago, we had this bearish pin bar rejection here. And 1, 2, 3, 4, 5 touches on this trend line. It's very valid. So I didn't participate on this one here, to be honest, because I had different patterns on the chart and it wasn't very clear to me. So I missed this out, but that's okay. And gas, the short stopped. So this level of support hold, and that was the beginning of buyers to come in play. Guys, for those who are watching these webinars on a consistent basis, or for those who are listening from the YouTube later on, remember how many times I told you we are just trading with a trend. in the direction of the trend until the price touches a most recent level of support if we are trading short, if we are trading to downside. Because what can happen at the level of support? Massive buying orders can start, accumulation can start, and a development of a new trend will start. But the development of the new trend, most of the times, it never just go like this in a straight line, because big funds and big corporations and governments, they don't want the public, the retail traders, to know of what they're going to do, or they don't want each other to know what their next move will be. What do? They start buying slowly, so they don't just create much of activity in the too much volume in the market. Okay, so at some point, people, they think, okay, this is doing nothing, but it's just accumulation of this move. And then we have the public participation when we see this trend developing. Now, this is a new trend developing, so we're going to get ready to find a recent support that this one was resistance area. Yeah, now this resistance has been broken. So for very, very valid psychological reason, this resistance here, this area, it's going to act, if the price is going to travel a bit more, it's going to act as support on this deep pullback. Okay, so here we're going to be monitoring the price for possible buys. All right, I hope it makes sense. So for now, we just understand that we are in a new push to the upside, let's say uptrend development. So what do we want to do? We want to place a plan in place, and we want not to chase the price. Guys, I've done the webinar yesterday about trading psychology, about trend development, trading psychology. It is the #1 reason people, they don't trade with the trend and they trade against the trend. They see this move here and they say to themselves, oh my God, what did I miss? I saw this bullish engulfing, I didn't take it. I saw all the signals, they weren't important at some stage. After, when this trend is developing, finally, everything, it becomes significant. But we are retail traders, and that's what you have to understand. You cannot beat yourself up in these scenarios, because we are not the movers of the market. We don't create the move. So after we see that a move it's in play, we have to get excited, because we understand that there are some big funds and corporates, they are building positions, so they most likely they will drive the market at least up to here. So we have this room to move, and I will be patient. When I see the first reversal candle on the daily chart, I can draw my FIB from low to high. Maybe it's going to be here, the high. Maybe it's going to be there, the high. We don't know. Maybe it's going to be here. Who knows? So I'm going to draw, let's say it's going to be somewhere here. I'm going to draw my FIB tool. I'm going to wait patient for retracement. And I would like either to go to the 4-hour chart or to the daily to execute my plan and make 2-to-1, 3-to-1. If the market is going to still trending and retest this area here after a bounce, I'm going to be able to squeeze 2-to-1 or 3-to-1. So that's what trading is. That's what discipline is in trading. It's not just to enter here and wait the market to go to shoot on a straight line. Yeah, it can go, but that's not the case. It's a rare phenomenon. It's like, it's a rare phenomenon. You enter here and the market just keep on going upwards. Usually the markets move in this cyclical zigzag way. Okay. So very well explained, Theo. Thank you, William. I hope it makes sense for everyone, ladies and gentlemen. Raquel, I've been trading without the real one. You are trading without indicators since you joined this community. Great value. Thank you so much. Thank you so much. I really appreciate it. Guys, I will definitely encourage you to give your feedback and leave these comments as well on the after I close this webinar, because really I would like to see also the statistics, how it helps me understand how you progress in your trading. Trust me, it's really important for me to know how I'm going to do my sessions based on your feedbacks as well, based on what do you see, what do you see improved within yourself in your trading since you are watching these webinars. So we are, yes, we are lions, Darshan. Yes, you are right. Of course we are lions. We are not sheep. We are lions. You're great, Theo. Thank you so much. You are great, guys. So, ladies and gentlemen, that's all from me today. Keep in mind, there are so much to expect based on our analysis with the US dollar. So I wish happy trading to everyone, and I look forward to see you tomorrow again at the same time. Guys, thank you so much. It was a privilege and honor to host this webinar for you. Bye-bye.